Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance. And if you've listened to this show before, you'll know that my name is Goose. And you'll also know that, yes, we are in the real estate space, but we also deeply believe, and our values are deeply aligned with exploring opportunity and potential wherever it may lie in a quest to achieve a life of more. That's what we want for you, and that's what we want for us, and that's what we want for the world. So that leads us on to today's episode. I was lucky enough to have a really great and interesting chat with a guy named Jaryd Krause. Now, he is a successful entrepreneur who helps people to buy online businesses. Now, we thought that was really interesting because we've been chatting offline and we wanted to share some of the stuff on the podcast too about the similarities and dissimilarities between online real estate and offline real estate and how you can use both as part of a greater scheme to achieve a life of wealth and abundance and freedom and choice and prosperity. So some of the stuff we talked about today is, what is online real estate versus offline real estate. We talked about how to apply the Holy Trinity principles in a different asset class and to understand how that works. So we're talking about cash flow, growth, the ability to control value. We talked about all kinds of stuff, like what is success and fulfillment and how do we approach that in our lives? Who and why would you want to buy online real estate? And we really kind of dug into the characteristics and benefits and lack of benefits in some ways between the two different types of assets that share so many uncanny similarities. So what we're talking about with online real estate is websites and buying websites and treating them like a real estate asset, much in the same way. We talk about the similarities between getting business managers and property managers and stuff like that. So whether you're interested in buying an online business or not, I'm pretty certain this is going to open your eyes to a few different ideas and concepts that you probably haven't thought about before. Because I remember my very first time that I heard websites referred to as real estate assets, and it really woke me up to a whole new world. And I encourage you to check this out because it may do the very same for you. Now, I'm not suggesting that you race out and go and buy a website now willy-nilly, but it is exciting to explore this potential and to understand where it could fit within your overarching portfolio strategy. Now, as I mentioned, Jaryd has a business that helps people to do that. We talk about that. So I would encourage you, if you do have an interest in it, to reach out to Jaryd. His contact details will be in the show notes. He's a great guy and he's helping a lot of people do really great stuff. So I strongly recommend, if you have an interest in wanting to explore the world, have a chat with Jaryd first before you go and race off and do it yourself. But of course, if you want to explore the conversation around offline real estate, which is what we specialize in, and you wanted to do that more and become better at what you do and to expand your potential and increase your impact and maximize your opportunity and your levels of fulfillment, then I strongly encourage you to head to theinvestorlab.com.au, where we have a veritable cadre, a smorgasbord, if you will, of opportunity and offers that are designed to meet you where you are. Everything from free resources to my book, Limitless, The Renegade's Guide to Building Wealth Through Property. We have an online community, which is a private and exclusive membership where we host exclusive trainings that aren't released anywhere else. We do live Q&As, location deep dives. We really unpack on a monthly basis thousands of dollars worth of information that is really designed to help accelerate you and take you from where you are now to where you want to be. So I know you're going to get a lot out of that. If you're interested in that, just head to theinvestorlab.com.au/join the community. And of course, there's links on our website as well if you want us to do the hard work for you and just help you buy a property. So there's a lot of opportunity there. So head to theinvestorlab.com.au if you want to check that out. But without further ado, we're going to jump straight into the episode. Again, I know you're really going to enjoy it. Jaryd's a really great guy and we had a really great conversation. So enjoy. Let me know what you think. And of course, if you do like this and our other episodes, the biggest and greatest benefit you could give us right now in the most easy and low friction way would be to subscribe, like, rate, review, and share. So if you can share this and help us spread our message wider, then that's hugely impactful for us and is greatly, greatly appreciated. So without further ado, let's get stuck into it. See you on the inside. Hey guys, welcome back to the Investor Lab. And joining me today is a very special guest. Now, his name is Jaryd Krause, and he is not only a successful entrepreneur, but he also interestingly, has built a business based around helping others to invest in online real estate. In other words, online businesses. So I thought it'd be a really fascinating discussion to have around some of the differences between online and offline real estate and what we can learn by comparing the values and ideas between the two different realities and seeing where the similarities lie and just exposing people to some new ideas. So, Jaryd, welcome to the show.
Thanks so much, Goose. Great to be here. I'll always love having chats with you. It's awesome.
Yeah, likewise. So a little bit of context for the listeners. So I actually, before this podcast that we're doing right now, I'd actually listened to your podcast. I knew about you, and then through mutual friends, it turned out you actually had an interest in buying physical real estate. We'll get to the difference between digital and physical real estate in a moment. And so there was this really great synchronicity. But I kind of want to take a really zoom way back out because I first came across the term online real estate or the terminology of online real estate only about, I would say, in the last 8 months. And it was actually a real big game changer for me. I was listening to a business podcast and they talked about buying online businesses, funnily enough, and referred to it as buying real estate. And mate, I'd love to firstly get a little bit of your story, how you ended up going in this direction, and then we can talk about maybe some of the differences between the two.
Yeah, I originally was going to go down the physical property real estate investment route when I was just out of school, really, and I started earning money quite early because I was a plumber, and I just couldn't stack the figures up to it being a good investment. Obviously, I didn't have the skills around property and the knowledge that you teach.
What do you mean? So you were a plumber and you were earning pretty good money, right?
Yeah.
What about the numbers didn't stack up? Because most people, they do, right? That's why most people invest in offline real estate. Sorry.
Yeah, I was investing in the stock market at the time as well, and I was just getting better returns in the stock market. And I was like 19, and it just wasn't going to give me I wanted the cash quick, right? And I didn't know the macro, why it's better to have macro trends and long-term investments and really build wealth slowly. I was this kid that was just like, give me the cash, man, give me the money as quick as possible. And I was doing that with stocks. And I started learning all of that quite early. I remember pestering my dad within the stock market when I was 15. Anyway, to get to the story of how I got to online real estate is I was a plumber, hating life. I'd run away from my job and I'd start to go traveling, and I really got heavily into drinking when I was at home at working because I was working crazy hours, 60, 70-hour work weeks, and then 3 hours in the car to and from work each day. So it was 18 hours a week in the car, and I was just resorting to partying hard and alcohol and going down a bad route. And I kept saving up, leaving and traveling. And one of my trips, I realized I was running, what I thought I was doing is running away from my job, but I was actually running away from my life at the time. And I needed a goal. I was like, all right, I can't go back to this. I need a goal. And I was traveling and living the life, and like myself at that age and a lot of other people that are traveling is like, we just want to keep traveling. So I literally typed into Google how to travel the world and make money online. That's what I typed into Google. And popped up like different websites, like travel blogs and things like that. I was like, cool, I'm going to be a travel blogger. And so I started travel blogging, and it was really hard, man. It was really hard. Like, a lot of people said it was simple, quick, cheap, and easy to make money online, especially at that stage as well. And it wasn't.
What year was this, just to be clear?
2012, I started researching, and 2013, early 2013, I launched my travel blog. Yeah, so then I went and started my blog, and I started making a little bit of money, but it wasn't enough to sustain the lifestyle I wanted. So I had to go back to work, and I came across this stat that 90% of startups fail. After trying to start my own, I had already tried to start 2 website businesses at this time, and I was just struggling and I was sucking at it, to be honest.
So just take a little step back. You've already tried to start 2 website businesses. So was one of them the travel blogging one?
Yeah. So one was the travel blogging one, and I realized travel blogging is really hard. Everybody with an iPhone and an internet connection is my competition. And Instagram was coming out, it was getting real big. And then I started this other website, it was like a drop shipping site. So where we can get into business models later. I guess I won't get caught up on this now, but
Yeah.
I was selling physical actual products,
Yep.
and I just wasn't really crushing it. I wasn't making enough money from it. I didn't really know what digital marketing was either. So I sucked, as you could tell. And so I realized it was really hard to, start these websites, but I knew how to run them. I knew how to grow them. I knew a little bit how to grow them on the SEO front, but not like pay digital marketing. And so I thought, well, I'm back at work, I'm hating it. And I came across this stat that 90% of startups fail. And I thought, well, if 90% fail, why don't I go away and buy one that's past that 90% failure rate and run it? So I jumped on Google and went and found these websites and website brokers, and my eyes just went, if people can see, my eyes just opened up to infinity. And I saw the numbers and it just made so much sense. And there are risks obviously involved with any investing. And I bought one business, I bought another one. Within like 8 months, I bought my second one. And then I bought another one within like 10 months after that. So in a short period of time, I bought 3 businesses and eventually replaced my income as a plumber.
How long did it take you from when you first discovered the idea of buying online businesses to when you could quit your job?
So I bought my first business in 2014. I bought my second business mid 2015. And from the second business, I was making more from my online income than my plumbing job. So it was only like 8 to 10 months.
Wow.
And then but I kept working. I kept working for a bit.
Why?
And because I didn't want to like quit and then have these businesses go back into like, business and life. We have ups and downs, and sometimes we have bad months and good months. So I wanted to make sure I was not quitting too early. And I had a good job where I was working quite close to home. I was a supervisor for Pac Fair, which is a big shopping center where I live, and for the firm I was working for. So I had a pretty decent job. And at that time I'd worked my way up, and it was quite cruisy. And I knew that afterwards I had this plan. I'm going to quit. I'm going to go travel for another year and a half and just run my 3 businesses. So I had something to look forward to. I had things in place, and I just didn't want to quit prematurely and get some more cash in the bank as well, so I could possibly buy another one.
Yeah, nice. At what point? So when you sort of were going into this direction, and when you were looking at online businesses, at that point, were you comparing it to other asset classes, or were you just going? Were you just literally like, what's the highest leverage way that I can get cash flow so I don't have to go to work? And how did you in those early phases, how did you associate the relationship between online real estate and offline physical real estate?
I really related to what I was earning in the stock market at the time, and it wasn't great. And how I looked at I took my money out of the stock market and put it into online real estate. And how I related online real estate to offline real estate is that with online real estate, I could get 100% return on my investment in 3 years.
Can I just jump in there? When you say 100% return on your investment, are you talking about cash on cash return, as in like net cash flow percentage back on cash input?
Correct. So net income. So if I went and bought a business, say for 100 grand, round numbers, right? Then it would take me 3 years to get that $100,000 back in net income.
Okay. So is it purely just a cash flow strategy?
No, because you can build these just like when you're renovating a property. You can build these up and make them more valuable assets and sell them. So some people actually flip, online real estate like they do with physical real estate.
Okay, cool. All right. So we've kind of covered how you got into it and why you wanted more freedom or leverage, better than being a plumber, better than digging trenches and fixing dunnies. And we've kind of touched on, so we've already kind of really clarified the fact that what we're talking about when we're talking about online real estate is online businesses, right?
Yeah.
What are the similarities? Like, just to try and give it some framework for someone who has never even come across this idea of buying websites and buying online businesses before, how do you define the similarities and the differences between online and offline real estate based on what you know?
So based on what I know, like I'm still learning a lot about physical property, especially with what you teach, which is awesome. And thank you. What I know that when you go away and you invest in physical real estate is that you need to know it's a good asset. You need to know it's valuable. You need to do your due diligence. So it's the same when you're buying a website business. You need to do your due diligence. You need to have these checks. So you've got pest and building checks and stuff like that. Like then same with a website, you need to look at, SEO checks and marketing checks and make sure you can work out like how much this online real estate is earning, passively per month or net profit per month. And it's the same with a physical property is you need to work out what your yield's going to be and how long it's going to take you to get, your return back and, similarities in that way with, any investments as well. But when you're running an online business is that you can have an operator run it for you. Like you do have a real estate agent,
like a property manager.
Property manager, yeah. So, or you could do it yourself and then, you'll learn a lot more about property. You got to get your hands dirty. It's a bit more work, obviously a bit more money, but I prefer in the online space, I prefer to run the businesses myself because I want to get a good education and then start to hire a team to do so. And then if in offline real estate, like physical property, I'm definitely not going to go down the route of running my properties. That's just a personal.
Okay, well, I want to come back to that. Back to that because it's really interesting. One of the things like a lot of people ask me, "Oh, should I go and manage my own properties?" And I almost exclusively say no. Like it's a bad idea.
Why is that though?
Well, it's a good question. Largely, there's a couple of reasons. So if you're investing in real estate and part of your qualification for whether it's going to be a viable investment is based around whether you can manage the property yourself, that is going to infer by nature that it must be within a certain radius of your location, which statistically is an extremely low probability that you're going to be buying the right type of asset at the right point in the cycle to get the maximum return and get the best benefit out of it. So when you take out that and go, okay, well, I'm exposing myself actually to more amount of risk by limiting my opportunity. Aside from that, the time, effort, and expertise involved is asymmetrical to the return. So what I mean by that is most people want to invest in real estate because they want to create more freedom, more choice, more abundance, however that may look for them. Now, most people don't wake up and say one day, I really want to be a property manager and I really want to go and check on the tenants and I really want to go and do inspections and I really want to get calls at 4 p.m. saying, oh, there's a pipe broken. Most people, when you actually think about it practically, you don't really want that.
Hell no.
You could deal with it. Like we all could do that. We all could be like, you know what? It's my property. It's my responsibility. And they're my tenants and that's fine. We all could do that. But the question is that what you want? And almost exclusively the answer is no. And I've never really seen it net as I say, it's asymmetrical, like the effort and the reward. I've never seen it net the right reward. I've seen people try and do it and then they end up hating property investing because they're stressed out and they're like, oh, I got to deal with tenants all the time. And it's like, well, maybe you just don't have to do that. So
I've got a mate with an example exactly like this. He's a rent investor and he bought a property close to him and had so much drama with his tenants and eventually just gave in and just went and did a bit of small little cosmetic reno and then went, I'm not going to rent this out. I'm going to get an agent to get somebody in, verify it, all that stuff. And he lives really close to the property. It just was a nightmare for him, even when you do live close by.
It's like, why would you buy something to create another job for yourself? That just doesn't make sense to me. Like the idea is that, whether you're investing in online businesses, offline businesses, online real estate, offline real estate, shares, bonds, whatever. There's an ultimate goal there. That's not just
correct.
That's not to go and give you, like, I could go and invest in bonds, but I don't actually, unless I have a specific interest in that field, I don't want to go and become a bond trader. I want to okay, cool, I understand the asset class and I want to get the benefit, but I don't want the work. Otherwise, we're all just creating more jobs for ourselves. And that's the idea, is to get ourselves out of our job, just like you, right?
Yeah, exactly. And, a lot of people may say, oh, I'm going to buy a business, and they might go away and purchase a job as well with an online business. Yeah. And that's a big no-no. And what I tell people to look for is, like, you want to buy, like, my mission is to help people replace their income so they can have more, time doing what they love and spending that with the people they love. but you could go away and buy something that takes you 20 to 30 hours a week to run. The idea is, and this is my philosophy, is to buy something that may take you 2 to 3 or 2 to 5 hours max per week to run, while you can still have that as a side income stream whilst you are working, and build up a couple of those, or build up that one and build it to a certain level that it's your predominant income, primary income, and you can replace your job with virtual assistants and stuff like that, because you don't want to go away and buy yourself a job, like in any investment, like you said.
No, and it's really interesting, actually. I've been listening to a podcast recently called Think Like a CEO by Gary Keller. So he's the author of The One Thing. He's also owns the largest real estate company in the world, Keller Williams Realty. He's a really interesting and fascinating guy. But what he said, he was talking about his early part of his journey when he started to build, like really expand the business and open up all these franchises. And he thought that all of these people that were opening up, but buying the franchises and opening up the franchises, he thought that they were all entrepreneurs and that they all wanted to be business owners, and but really what he actually found out, they just wanted to buy a job where they had a bit more control.
Yeah,
it's a really interesting mental paradigm. A lot of people think that they want one thing and then want another. But look, let's try and give this a bit of a geometry, I think, because as you probably know, our core principles around real estate investing are rooted in the Holy Trinity, which is a very simple 3 principles: cash flow plus growth plus the ability to add value or control the asset. And that's what's going to give you the best outcome. And where we see people falling down is when they have cash flow, no growth, or growth and no cash flow. And in any case, the lack of the ability to manufacture, add, control, or in other ways manipulate the value proposition of the asset so they can get the outcome they need. How does that relate? Like, let's try and compare those on a unit basis. Like, how does growth work in digital real estate? Let's say you go and buy a website, and we don't need to. It's probably just don't advise people to just go out and buy websites willy nilly. But let's say you go out and buy a website. Like, what is I can tell you the national average growth for real estate in Australia is 6.8%. That is heavily skewed, and more realistically, it's around between 4 and 5.5%, right? Percent growth per annum. How do you define growth in an online real estate asset?
It's such a great question. There's so many different types of business models and how businesses earn money where they're selling, digital products, physical products, services, whether they're selling ads or just using affiliate links and commissions and stuff like that. So there's so many different ways you can earn money online. Actually, there's an infinite amount of ways, because the internet is also evolving. In terms of how do you get a number on how much you can grow, or what's the growth rate of an actual business, is going to be very dependent on the skills that one may have to run that particular business. So if you're buying a content website, then you want to know how much, you want to know a lot about SEO, and you want to know a lot about getting traffic to the site and producing great content to get a bit of a ballpark on how you could grow this website and by how much. Now, things change. I mean, it's the same with physical property, is that, things change. Like, you may have policies and things within a town that may change the growth rate. And it's the same with online business. You got algorithms that change how traffic shows up to or comes to your site, or how you get ranked. So I don't actually know the numbers, to be honest. I don't actually know what numbers or how you can really work out the growth rate of a website, unless you have the skills to determine a rough estimate of what you could grow the business by.
Yeah. Okay. So it's really skills based. It's not. There's no, because there's a
for growth. It is. Yeah.
Yeah. So because with we'll just call it property. With property, providing you don't buy in an area with like no clear economic fundamental positives, like if you don't. But if you buy reasonably populous area and you follow some pretty basic principles, there's 100% success rate over time. You pretty much can't go wrong. Like, it will continue to go up for a variety of different mechanical reasons. But it sounds like with online real estate, it will only really grow we'll get to yield and stuff in a second. It'll only really grow in value if you know how to make it grow in value.
Yeah, think about it this way. Like, you've got a property, say you've got a physical property, and then and you can make money from this physical property. Imagine having everybody in that town fighting to jump on top of that property, remove that property, and take over that land and earn money themselves. That's what it's like in the online market, because you've got people that are fighting for digital space in the search engines and also the algorithms. So it's a bit hard to, and a bit different.
Mate, if people do that in real estate, in property, that's called squatting. Like you've got a nice property, somebody else goes, I'm going to go and I'm taking it over. I'm going there and I'm going to claim squatters' rights. Is that the kind of same analogy?
It is exactly like that, because you're fighting for the land, you're fighting for the real estate, because you've got competitors there with tens of millions of dollars or hundreds of millions of dollars that can produce great content, get ranked higher on the search engine, so their websites show up more often. Or you got people that could put so much more money into Facebook ads and Google ads and take over more, dominate more of that property. So it's like you and I don't want to say it's a war or it's a fighting, and you can strategically work out ways that you can spend less money and build your business in a more valuable way than just chucking a whole bunch of money in and not giving you a result. But you are needing to work out how you can, maintain this business, maintain the growth over time. It doesn't need to be like full-time work where you need a team of 20 people. You could do it just yourself and you could learn the skills yourself. Although if you did just do nothing over time, that business would, degrade.
Crash.
Yeah.
It'd devalue, right? So, exactly. Okay, so what we've established there is that physical real estate is actually probably a little bit more passive in one sense. You can buy it and do nothing. And from a growth perspective, as long as you bought reasonably okay, it's probably still going to be fine in 10 years' time. It'll be better. In fact, the way I like to think about buying physical real estate is I want to buy assets that if I was to buy it and then go into a coma for 12 months, would I wake up and be wealthier after 12 months? That is a really interesting vector to put on it, because I don't really know any businesses that you could do that.
It depends on it. Really, there's so many different variables. It depends on if you have a team and if you have good processes and systems for that team to grow the business whilst you are out. I mean, there's people that, say Richard Branson, for example, owns multiple businesses, does hardly or little to no work in any of them, and they grow. Why? Because that business has good process, systems, and staff that are running and growing and scaling the business itself without the owner having to be involved. And this is my goal for everybody that does buy a website business, is you don't have to have a CEO and a COO and a CFO and this whole big executive team. You could just have 2 to 3 VAs or more or less, and have good processes and systems that you give them that can run the business, so operate the business, and put them on a growth path as well, without the owner having to have too much involvement in it.
Interesting. All right, so we've covered growth. So why don't we talk about yields and cash flow? Because I think this is where it gets really interesting. And this is where me personally, when I first heard about, digital real estate, I got pretty excited and I started checking out all the buying website, Empire Flippers and all this. And I was like, oh my God, I can look at all this. And I very quickly realized I had no idea what I was doing. So just to get out of there quickly. What are the kind of yields that you would expect? Or what are the kind of metrics that you would work with from a yield perspective or from a cash flow perspective? Like what kind of views have you got on that from a digital perspective?
Yeah, just for those who are going to go and do what you did, Goose, is when you do check out these website brokers, it's, like I said, my eyes just, opened up to infinity, and you can see like how much income there is coming in. And, you got out of there quite quick, like you said, and that's a good thing, because you need to get out of there and learn to do due diligence and invest in these businesses wisely. I don't want people to go away and buy something based on emotion. And this is most people, and I would say 95 to 99% of people will buy their first website business based on emotion. So don't do it unless you've got somebody else in your corner to help you combat that emotion and remove that emotion and help you make a logical decision. But in terms of your question with growth and income and cash and yield, how do you... Hang
on a second. Before we get onto that, you hit something really interesting there. Most people will buy their first online business based on emotion. Now, I can see how people do that with with property because everyone has lived in a house and they've got these emotional biases on what it should look like and could they imagine themselves living there. But for someone going to invest in a website for the first time, surely they don't have those same emotional caveats.
Not in like terms of like what the business should look like, unless they've done so much research for years beforehand and they've really worked out what they want. But the emotions come up because the amount of income that you can make in a shorter period of time. Yeah,
got it.
Yeah. Is that what you saw? You're like, what? This business is this much and I can make this much?
I was like, man, I don't even know what these businesses do, but look at how much cash flow there is.
One. Yeah.
I was like, I just say, what am I doing? Like, yeah. No, and I very was like, hang on, back off, focus. So, all right, so let's talk about cash flow then.
Yeah. So cash flow, traditionally, it used to change. It's like the multiples are changing. So how you value a business is based off a multiple, and these could be monthly multiple or a yearly multiple based off the average net profit of over a span of time. And it could be 3 months, it could be 6 months, it could be 12 months. Normally, I like to work to the average net profit over a 12-month period because it's a fair evaluation. Some of the brokers value businesses off their best, keyword best, 6 months. So they get the average net profit over their best 6 months. And then they value the business based off like a multiple of 20 to 40.
So that would be growth. That would be growth though, right? So really what you're saying is you can manufacture growth by increasing cash flow, just like a commercial real estate asset.
You can manufacture growth by increasing what, sorry?
Increasing the revenue of the asset.
Yes, correct.
Yeah. So, okay. So that's the growth piece because you can get many multiples on your purchase price based on net.
Yeah, you can make the business less risky which can also grow the business, which can give you a higher multiple. And you could, add more revenue to the business, which will give you keep the same multiple, but you times that higher revenue amount or average net profit amount by that multiple. So that's how you can get your growth. But in terms of income, which we've been wanting to get to, is you can buy a site that will make, a 20 to 30% ROI in 1 year. So, and sometimes as business, like I bought a business where I've made 100% ROI in just 7 months. And this is in 2015. Obviously the multiples have changed because more people are pouring into this investment category because they can see the returns that are being made, and that makes the multiples go up because people are willing to pay more for those assets or those investments. So the multiples are slowly increasing with this pandemic. Who knows what's going to happen? There's some predictions of it decreasing a bit, but on average, 20 to 30% ROI net per year.
So let's break that down in real terms. So if you buy a website business for $100,000, it'll produce $120 or $20,000 net cash flow a year.
Yeah. 20 to 30. It depends on the business model that you buy and the business. So sometimes you could get a 50% ROI in 1 year. I've achieved better than that. And that was when the multiples were a little bit lower. But also when you add in some skill sets, either from yourself or VAs or consultants that can grow the business, I mean, you could get your ROI back a lot quicker.
I'm a little bit confused because when you're talking about ROI, are you talking about saleable value or are you talking about net cash flow? Because let's say you buy a business. Okay. Oh, right. Okay. So the net cash flow will increase on a multiple? No.
So the multiple is how much you times the average net profit by.
To get your value, to get your asset value, right?
Correct.
So essentially your saleable value, right?
Correct.
So, okay, got it. Yep.
So if you make the business more valuable by decreasing risk and having to do less work, so you put a VA in, virtual assistant for people wondering, and they do most of the work, you can push your multiple up because there's less risk in the business and it's easier to run. So it makes the multiple go higher. And then with the net cash flow, the average net profit, you can increase the average net profit by increasing your revenue by getting more sales.
Got it. So if I'm hearing you correctly, then you're talking about buying, adding value, and then selling, so flipping, basically, over either a 1 to 5 year time frame.
Correct.
Awesome. Why don't you buy and hold?
I do.
What is the strategic benefit or lack of benefit between buying and holding or flipping?
It's probably the same as real estate, in my opinion. When you buy something and you grow it over, say, a 6-month to 12-month period, and then you go to sell it again, what you're doing is you need to build another team, or you need to learn another whole new skill set to run and grow that business. So you'd need to constantly keep learning, and you're always very, very busy, or building a team, building processes and systems, and learning new things and growing this business. That stacked up with when you go to sell the business, then you've got to pay a commission every time. Or unless you're going to sell it yourself, which is more added work, I'd suggest selling it through a broker. So the compound effect of the amount of work you need to put in, plus the compound effect of how much you need to pay in brokerage fees, adds up to being so much work that over the time of the business, over the time, say, a 10-year period of doing 2 businesses every year, that's a lot of work. And in my opinion, I don't believe it's worth it when you could just have consistent compounding growth of a business by learning one thing, focusing on it, and getting better and better and better at it.
Yeah. I mean, I would agree with that. There's definitely upsides between doing basically development projects, buy, develop, liquidate. There's definitely benefits in that, as long as they fit within part of your overarching strategy. Let's talk about finance for a second, because obviously a big part of physical real estate world is leverage. You can get into a property with 10 to 20% deposit, in some cases 0% deposit, if you know how to get the finance, and you can create a huge amount of leverage in that asset, which means that you can get an extreme multiple on your investment in the first place. Can you get the same? How does financing work is this just cash? Like, I've got $100,000 cash, I'm going to go buy a website that's worth $100,000, or how does that work?
Predominantly, it is mostly a cash world in our industry, unfortunately. Now, if you live in America, it's a bit of a different story. They've got these things called SBA loans, which are government-backed loans, where a lot of people are getting approved for these SBA loans. Now, it depends on your country, it depends on your banks, it depends on your finance broker as well. So I've had people that are buying businesses with finance, from America, also within Australia, that have used different, loan structures, and that could be a business loan, it could be a personal loan. But at the moment, the dinosaur banks still have trouble valuing digital property because they don't have collateral, they don't have physical. A lot of them anyway don't have physical collateral that they can come in and take over and acquire some money back for what they're actually owed. For example, a warehouse or a bunch of stock that could be used as collateral, but the stock's always changing, evolving and stuff like that. So it's really hard for them to have collateral, and that's why they prefer people to have more cash. Now, if you're going to buy a $100,000 site, you could go to and get, maybe a $50,000 loan and pay 50 for it in cash, and then use $50,000 finance and just pay your finance off. I've had people do these sorts of deals. Now, when you come to think of buying a $100,000 business, you do have leverage within, like you call it, vendor financing in real estate, physical real estate. In digital real estate, you do the same thing. We call it seller financing. Vendor, seller, same thing. But you purchase the business to $70,000 down, and you pay that $30,000 out over a 6-month time frame. And you can do things like that as well.
Awesome. Okay. I'm finding this conversation fascinating because I think, because I like, what I like about it so far is that we can quite clearly see how the Holy Trinity principles apply in this asset type, and how they clearly correlate with the opportunity and what you can get out of it. So growth is dictated by market demand, and so supply and demand. Basically, if there's 10 million e-commerce businesses and stuff like that, then maybe the demand will exceed the supply will exceed demand. So you've still got supply and demand metrics, which is fine. Plus, you've got psychographic influences, because what do people want? What is the mood of the people, and what is the appetite for that kind of asset? Then the growth is dictated by the net cash flow, which in fact if you really want to drive that up, you've got to add value. You've basically got to renovate the business in some way in order to maximize that, which is going to then increase your growth again. So it kind of works in a very cyclical way.
Yeah, the big difference with physical real estate is that if you just leave it and do nothing, it will grow over time. That's not the case with an online business. It will need work.
Okay, so what's the end game for you? Are you just going to keep buying online businesses, or like what is the motivation for you to continue to do this? You left your job ages ago, so now you could just travel the world and live out that dream you had. What's motivating you now?
Yeah, I've done the whole travel thing. I've been to 30 plus countries and every continent except Antarctica, and it's great. And I did it myself, and it just wasn't, I wanted to do it with somebody. And I've traveled with my partner, and it's great as well. Love it, want to keep doing it. I will. But I love the reason that I'm in this game is because, and there's a big difference between success and fulfillment. A lot of people are just achieving the success and like the material success and the wealth and stuff like that. And I'm all about being fulfilled and enjoying my life. And a huge part of my fulfillment is helping people replace their income as well. So that's what my goal is. Like I've hit it, and to keep being happy and be fulfilled as I'm going to keep doing what I'm doing now. I do have a lot of people that are coming to me, like I help people replace their income and buy businesses, but I have a lot of people that are coming to me and say, hey, Jaryd, I got cash. I don't have time. Can you buy the business for me? Can you run it? So I want to help these people as well. So I'm setting up a fund where we'll start buying, obviously bigger businesses and running them for people with our team. Yes, when people come to me, I want to be able to help them. And that's where I really get my fulfillment.
Yeah, interesting. And that kind of fund you're setting up, so that'll be kind of like a syndicate.
Yeah, it'll be so people will be able to buy like shares in it. The shares won't be, a couple of dollars or, a couple of $1,000. They'll be a lot more. And, it'll be at the start, we'll be having minimal investors because we don't just want headaches with investors that are like emotionally attached to getting their money back as soon as possible, because this is a over time growth asset. And yes, it'll be like a syndicate where it'll be a group buy. So say, for example, if you're going to do it's the same with real estate. You could just have, 5 people go in and put a bunch of money into a company and go and buy one real estate, another one, and grow them over time.
So all of this begs a very pertinent question. If you've obviously found your niche in online businesses, so it's business, it's real estate, it's all of this kind of stuff wound in together. Your passion is helping people and serving people with the best skill base that you've got and having the most impact that you can, which is awesome. I actually did a really interesting podcast recently talking, in the podcast we talked about the diminishing return of things and how the only true exponential return is through service. Yeah, which is really cool. But why we started our conversation because you're interested in investing in physical real estate. Why would you bother? Like why would you? Because you can diversify within online real estate. You don't need to diversify elsewhere. Why would you go and buy physical real estate?
I have bigger goals as well in fulfillment, in giving. Is I definitely want to build up a physical property portfolio, so I can start to grow that and put my money that I earn from online assets into physical property, and have that rather than just sitting in the bank not earning money and diminishing over time because of opportunity cost and inflation. I'd rather put that into physical property and have it grow over time. And that, that money that I acquire, I can put it into philanthropic projects as well.
But you can do that. Like you've got the skills and intellect to be able to do that digitally. Like I don't understand why you would take the money out of where you're already crushing it. Like what is the diversification benefit?
Like there's always risk with you, as you can see in online business. There's risk involved. Probably definitely more risk than buying physical property, because the market's changing. You're always having people want to take over that digital real estate, and you've got competition. The market change, or the algorithm changes, the platform changes. They can be brutal. Like I've seen people lose their 60% of their business in a day because of one change from a company like Amazon that changed their their commission structure. So, and there's ways that you can prevent yourself from having those risks within your own online business, but definitely diversification is a big thing for me.
Yep, makes sense. And so you talked about philanthropy, leaving, and like, obviously it sounds like leaving a legacy and all of that kind of stuff. What is it that you want to be remembered for, or how do you want to be remembered, or do you want to just leave an impact and disappear into the shadows, or how do you want to be? What impact do you want to have on the world?
It's a great question. I don't feel that I struggle with a bit with ego as well. Like, I want to be such a figure that everybody remembers me for all the time, or do I just want to do my piece and do it, under the radar and make sure I've helped people the best that I can. And so at the moment, I don't have a big legacy piece that I want to be remembered for by, within all of the ages and all the time. I'd love to be remembered by just somebody that will go out of their way to help somebody. But yeah, like I don't have a big, massive. I don't want to be the Steve Jobs that's like changed technology forever and stuff like that. That's not my
dent in the universe.
Yeah,
and everything
I'm not
like that.
Elon.
Yeah.
I'm not going to send people to space. I don't want to be remembered for the first person to send somebody to space. And maybe in 10, like it's not like I'm passing soon and I'm quite old. In 10, 20 years time, things may change.
Well, let me ask you then, how do you define success and what pulls you forward each day? What is the thing that motivates you to get up and keep going every day? And how do you define that? And what habits or activities have you got that push you in that direction?
It's a great question. What defines success for me is I like to not use the word success or think of it as success. While something can be successful, I like to, and I keep using this word that I have throughout this podcast episode, is I like to use the word fulfillment. Like, how am I being fulfilled? And a huge part of me being fulfilled is making sure that I've helped people. Like when I get messages from my clients saying I've just bought a business and like I've just got my first income, it's just come into my bank account. I'm so happy, I'm so stoked, and I'm going to quit my job on this date. That makes me hugely fulfilled. And when I get in from a surf, like I love surfing, or when I'm traveling around and I get messages like this and, I show it to my partner and we really are so fulfilled with where we're at. Like we're so grateful for the things that we have. Like we don't need to bust our guts like we used to. We get to help people with what we know. And we're very grateful for what we can do without having to go away and splurge and spend money on stupid things that are meaningless. So that's success to me, just being fulfilled.
Awesome. I echo that massively. Like I echo that massively. The greatest satisfaction, fulfillment, motivation, drive, inspiration, everything that I get is by helping other people. It's as I mentioned, it's got such an exponential return. And the exponential return is it's not self-serving either. It's exponential because if you can serve someone else really well and you can give them a high degree of prosperity, or increase their emotional capital, relationship capital, intellectual capital, financial capital, whatever that may be, that will allow them to in some way impact others. Exactly. Which it cascades up as opposed to cascading down. It doesn't depreciate, it appreciates.
Exactly. And this is, when I used to do sales calls and get people on through phone calls to my program and working with me, I'd tell them if they told me they got kids, I'm like, dude, I don't care. Like I'd be so passionate about it. I was like, I care about you, but I don't care about you as much as I care about your kids. Because the stuff that you're going to learn with me right now, like I want you to teach that to your kids, and I want them to teach it to their kids. And it's the same with when, I used to teach people gratitude, and I teach people a lot of different personal development things in my community. And, people would come back and say, hey, I started doing gratitudes at the dinner table every day or before bed. And now my kids are doing it and their friends are doing it. And just the impact that you can make just by teaching one person, and they can teach a lot of people within their circle of influence is huge. And that's just so fulfilling.
Yeah, it's massive, isn't it? It's massive. It's so. Quite frequently, I'll get either an email or a text or a Facebook message or someone that I don't know who they are, and they're reaching out to me
to your
just to let me know. Yeah, listen to a podcast, read the book, saw a post or whatever, something, and this is how it's changed my life. And I'm like, oh man, it's amazing.
Yeah.
Mate, awesome. I've really enjoyed the conversation, and I think what's most exciting, as I mentioned, is the ability to conceptualize different ways that we can all expand our potential and our opportunity and our impact in the world. So now you not only have you got a podcast, Buying Online Businesses, you actually have a membership site and a whole bunch of other stuff. Like if people wanted to get involved, they like the sound of this and they want to explore the online world, what should they do? Where should they go?
Yeah. First, if they're interested, go away. Don't go away to the website brokers and get all emotional, like, I'm going to go away and do this and get super excited about action taking. I'd say the first step is like, go away and just listen to my podcast. See if you actually like my vibe. See if you like this industry. It may be for you. It may not be. So check that out. It's Buying Online Businesses, the podcast. And if you have questions, then you can just go to my website, buyingonlinebusinesses.com. Yeah, if you want to check me out, you just chuck my name in and all that into Google as well.
Awesome. And just to kind of make it clear to help people understand if they're even the right person to kind of get into this world or this, how do you know if someone's ready? If someone's listening to this thinking, oh, maybe I'll give it a crack. Like, what are the kind of criteria that you might need to meet to really be able to, take powerful moves in this new industry?
I'd say it's somebody that's willing to put some time aside and is an action taker. And, if that's somebody that, even if they don't have a big amount of money right now, it doesn't matter. Like if you're an action taker and you're prepared to put some time aside, you'll get the money and you'll be able to work your way to getting the education to purchase a business as well. So I don't like to just say, all right, if you've got 100 grand, come and see me. Let's go away and spend that money. This can be literally for anyone, so long as you are very committed to achieving a certain goal and putting time aside and taking action upon that goal.
Awesome. Love it. Well, I'm sure that there's going to be some people reaching out after listening to this podcast because I think it's quite a compelling opportunity to explore. So, mate, thanks so much for your time and I really enjoyed it. And of course, we'll chuck some links in the show notes and I look forward to our next conversation.
Yeah, me too. Thanks so much. I really enjoyed it. And yeah, we'll keep chatting.